The global economic outlook has weakened recently as the trade dispute between the US and China escalates. Meanwhile, news today that Germany's economy shrank in the second quarter as the trade war took a toll on manufacturers. What will all this mean for the world economy and for business here in the UAE? Steen Jakobsen is Chief Investment Officer at Saxo Bank. He's with us via Skype from Copenhagen in Denmark. Great to see you, Steen. From all the extensive data you have to hand, is the global economy heading towards a recession this year, do you think?
Yeah, so if you take it at the top line, today we had the world's biggest exporter, Germany, moving into recession. While that data was being published, we also saw in the US that the yield curve, the difference between short interest rate and long interest rate, inverted, which in history has always been an indication of recession. So not only is Germany moving towards recession, but we're also seeing the US, which by many people is deemed to have been doing better, edging towards a recession. So Greg, clearly all of the red alert buttons needs to be flashed right now.
If we focus on gold, what does the current price tell us about investors looking for a safe haven at the moment?
Yeah, so what has transpired over the last 6 months is that the government's interest rate in the G5, all of the major economies of the world, has halved in terms of the yield that they give. We have a number of countries where the full issuance of bonds is now negative in yield. And of course, as gold is a non-yielding asset to carry, a tangible asset, it becomes relatively more attractive. What we also seen at the same time is that central banks, which since the great financial crisis has been reluctant to either sell or add to their stock of gold, is now adding because, of course, the alternative being buying exactly the same amount of negative yielding government debt, which they are at all costs trying to avoid, despite their own central bank fueling this negative interest rate move.
Steen, the US-China economic trade war affects everyone. Should we be more concerned about it, though, at the moment, do you think?
I don't think right now, Greg, that the main marginal mover of the market is the trade war. What we have realized over the last 3 months is that they're never going to be a real deal. It will be a paper deal at best. But what is very, very clear, and again, we saw it over the course of the last 24 hours, the Chinese has been insistent that any trade talks that are for real needs to be based on the fact that tariff goes down. As you know, even with the small sort of dilution of the scare from Trump yesterday, we are still moving ahead with increase in tariffs. We're seeing a marginal impact on inflation in the US. But overall, what it means for your region, for my region, is that being export nation, being oil producers, the demand will be less, the trade flow will come down.
So what is your focus then for the second half of 2019, and what's your word to investors?
So we have had the attitude that this was a false change in terms of the monetary environment. We remember back in December, Fed being hawkish, now they're extremely dovish. I think your viewers need to prepare themselves for a very aggressive Federal Reserve, probably cutting interest rate by 50 points by the next September meeting or even before. And at the same time, you'll see a Donald Trump live up to his rhetoric of trying to create a weaker dollar. In the eyes of Trump, the rest of the world is to blame for the dismal performance of the U.S. economy. As this economy slows down due to the yield curve, due to the negative yield of the world, the trade war, of course, his point will be more and more accentuated by him and his statement through, unfortunately, mainly Twitter.
All right, Steen Jakobsen from Saxo Bank. That's where we'll leave it for now. Appreciate your time. Thanks a lot. Some more results to tell you about now. And Damac Properties has posted revenue of 1.9 billion dirhams and sales of 1.8 billion in the first 6 months of 2019. Gross profits for the same period stood at 502 million dirhams, reflecting gross profit margins of